Hey guys, let's talk about how making biweekly mortgage payments as opposed to monthly payments can help you pay off your home faster and save you an interest. Maybe you heard this before, maybe you're wondering if this is a legit way of saving an interest. It is, but you need to talk with your loan servicer so that they can set it up for you, because usually lenders don't accept partial payments. So if you decide to do biweekly payments without letting them know, they will just hold on to the first payment that you make, the first payment of the month that you make, and they will for the second one to come in to apply them together towards your mortgage. So this is why it is important to set up with them so that they can apply the payments as they come in, as you make them, and you can actually get the benefits that we're going to talk about in this video. Also, they might have some requirements, so you need to talk to them before you decide to start doing it. Let's use this online calculator to look at how it works. With this calculator from Bankrate, we can visualize how making biweekly mortgage payments versus monthly payments can help us. So let's use a $500,000 principal balance for this example with an interest rate of 7% and an amortization length of 30 years, which is the most common one. Then when we calculated, this app shows us the comparison between the two methods. So the monthly payment is $3,326 and the biweekly payment is just half of that. By doing this, you are actually making 26 biweekly mortgage payments as opposed to 12 monthly payments. So 26 biweekly mortgage payments is equal to 13 monthly payments. So in fact, by using this method, you're just adding one more payment per year. It may not seem much, but when we look at the interest that this can save you, is when the big difference comes into play. So if you look at the entire life of the loan, which is 30 years in this case, then you'll see the difference in interest that will be paid, which is almost $180,000 over the life of the loan. And not many people will actually keep a loan for 30 years. But this is just an example. And if we look at the amortization table, we can actually see how the savings start stacking up from the beginning. During the first year, we only see a difference of pretty much the $3,000 that we're making, just of that extra payment that we're making. But when we look at year 5, for example, we see that this difference is starting to stack up. Now it's a difference of $20,000. And this is the principal loan balance that is remaining. By year 10, we can see that the difference is $50,000. And if we look down, if we go down the road, then we can see that potentially the home could be paid by year 24 as opposed to by year 30. Remember, it is important to set up with your loan servicer first because they may have some requirements to allow you to switch to biweekly payments.